$1.48 trillion is the staggering amount of earnings Wall Street expects companies to rake in this quarter, setting a sky-high bar that seems nearly impossible to clear. Yet, analysts at Piper Sandler think corporate America just might be able to pull it off. This is largely due to the impressive performance of the tech and finance sectors, which have been driving growth and innovation in recent months. If companies can indeed meet these lofty expectations, it would be a significant boost to the overall market and a clear indication that the economy is still thriving. The reason this matters is that it has a direct impact on investor confidence and the overall direction of the market. If companies can deliver on these high expectations, it would be a huge vote of confidence in the U.S. economy and could lead to even more investment in growth. On the other hand, if they fail to meet these expectations, it could lead to a significant downturn in the market. So, all eyes will be on the earnings reports in the coming weeks to see if companies can indeed clear this high bar. Moving on, it seems like the AI boom is continuing to drive growth in other areas of the market as well. The AI boom just found two new winners, Goldman Sachs and JPMorgan Chase, with both banks showing record revenue driven by surging trading and investment banking. This is a clear indication that Wall Street is a major beneficiary of the AI boom, and it's not just the tech companies that are benefiting from this trend. The fact that traditional banks like Goldman and JPMorgan are investing heavily in AI and seeing significant returns is a sign that this technology is here to stay and will continue to drive growth and innovation in the financial sector. This also highlights the importance of adaptation and innovation in the financial industry, as those who fail to keep up with the latest trends and technologies risk being left behind. In other news, Warren Buffett has made headlines by excluding the Gates Foundation from his annual donations of Berkshire stock. This move has raised some eyebrows, as the Gates Foundation has been a longtime recipient of Buffett's charitable donations. While the exact reason for this exclusion is not clear, it's likely that Buffett is simply diversifying his charitable giving and exploring other opportunities to make a positive impact. This story matters because it highlights the importance of strategic philanthropy and the need for even the most well-intentioned donors to regularly review and adjust their giving strategies. As we move on to other stories, it's worth noting that the recent relief at the gas pump may be short-lived. The ongoing tensions between the U.S. and Iran are threatening to disrupt the global oil supply and drive up prices once again. If this happens, it could have a significant impact on the economy and inflation, which has been a major concern for many Americans in recent months. The fact that the U.S. and Iran are vying for control of the Strait of Hormuz, a critical oil shipping lane, is a clear indication that this is a high-stakes game with significant implications for the global economy. Finally, for investors looking for a smarter way to invest, it's worth considering an overlooked index that has outperformed the S&P 500 over a 30-year period. This index, which tracks a specific sector or group of stocks, has consistently delivered higher returns than the more popular S&P 500, making it a compelling alternative for those looking to diversify their portfolios. The reason this matters is that it highlights the importance of doing your research and exploring alternative investment options, rather than simply following the crowd and investing in the most popular indices. And that's all for today. Tune in tomorrow when we'll be discussing how a potential recession could impact the housing market.